Basically, what we've seen, as you know, has been quite a rising frequency of cyber attacks. A number of high-profile names have had cyber attacks in the last few months and years. So really the importance of cyber protection has really risen across corporations globally and in the Americas in particular. So many boards are saying we want to look into cyber insurance as some form of protection against cyber attacks. So the insurance industry has responded. And what we've seen is quite dramatic growth in the levels of cyber insurance premiums. Across the US, we think that the market has grown by about 30 to 35% per annum in the last few years, so quite sizable growth. What we see is that many P&C companies are writing new forms of protection which offer cyber cover. They're usually quite bespoke because each company wants protection which suits their particular risks. So P&C insurers will usually work closely with the company buying the policy to make sure that the policy fits quite well. Many of the risks around cyber insurance are still, they're not particularly well modeled. For example, compared to catastrophe risk, you don't have the same level of modeling capability. So most insurers see the growth opportunity, but they remain somewhat cautious in growing. And they also use a lot of mitigation techniques like limiting the amount of policies they write, use of reinsurance, looking at their aggregation risk to make sure that their risk is somewhat controlled as they grow into this market. I think the main reason why for insurance companies this risk is still is not a big part of their balance sheet risk, because again, the policies they're writing them with specific limits on certain types of cover and specific types of exclusion for certain types of risk. So I think insurers are still acting quite cautiously because, for example, the Target cyber attack and also things like Anthem and JP Morgan, these are still relatively few examples, but they're quite high-profile ones. And insurers are still continuing to learn about how cyber risk actually manifests itself in different corporations. For agents and brokers, typically they'll be concerned about what's the credit quality of the company I'm placing my business with. So is the company profile weakening, the credit strength weakening, or is it improving? We see this cyber insurance as being a product which is relatively high risk, and we think it is growing. But in terms of the size of the business on the insurance company's balance sheets, it's not material as yet to change the company's overall credit risk profiles. But the main story looking forward, I think, is going to be how much does this market grow and how insurers will manage that and continue to serve the needs of what is undoubtedly a market that corporations want to buy cyber insurance.